Hey everyone, in our latest Trade to Black podcast, some of the information that we heard last week while in Chicago at the latest Benzinga Conference is needless to say how this whole industry is built on retail investing. And in order for cannabis stocks to move, we need institutions to start coming in and buying. Well, one of the best kept secrets and big announcements last week is how one exchange with big institution contacts is about to change the whole investment thesis. Big news to say the least. Who is it? Find out now in our latest Trade to Black podcast. Hey everyone, welcome to the Trade to Black podcast as we continue our coverage here in Chicago for the big Benzinga Cannabis Conference, as we continue to have a lot of guests here as we're cruising down the Windy City in the streets. And right now we have the Chief Revenue Officer of the Neo Stock Exchange, which is located in Toronto. It also announced a big deal here in Chicago, obviously, earlier this year. But Erik Sloane joins us. Good to see you, my man.
Pleasure to be here. Thanks for having me.
Yeah, great to have you on. What's the vibe been like so far as you've been attending this event here on the first day?
Conference is great. Seeing people, a lot of people we've done business with digitally and flat screen for the first time in the last 2 years. So it's awesome
nice.
to get out.
It's nice.
Tremendous.
So your exchange, predominantly known as being a company for a lot of tech companies, psychedelics, even in the crypto space, we're now starting to see a pivot into the cannabis space. And you, like I said, announced a deal with the Chicago Independent Board of, what's the O stand for?
Chicago Board Options Exchange.
That was announced on June 1st, which is a pretty monumental announcement. So walk my viewers through what that announcement means, because as we know in this industry, everybody has that hot question. When are these companies going to be listed on senior exchanges to have access to institutional dollars?
Absolutely. Happy to answer. So from a Neo perspective, we're actually Tier 1 stock exchange in Canada.
Okay.
Tier 1, senior, main board, they all mean the same thing.
Okay.
It means more rules, tighter regulations and restrictions for public companies. It means disclosure. For us, we've had that at Neo since day one, and we've been gradually showing the street through examples, and some of the greatest ones we've got are larger MSOs listed on Neo, like Columbia Care,
right,
where they've held up to those standards, seen that track and progression occur, and in November this past year, they actually were the first U.S. cannabis MSO to make it into the MSCI Small Cap Canada Index benchmark.
That's impressive.
Why is that significant? It sounds great. You're
right.
an index. Everybody wants that. But it really means two things. Institutional investors,
right,
which nobody has.
Right.
And two, it also means that you're getting guaranteed buyers from some of the largest pension plans and institutions in the world. When they invest in Canada, they invest a little bit in Columbia Care.
Okay.
That is very significant, especially for an industry that most of their peers are listed on venture exchanges that are not eligible for indices and therefore institutional investors. So you guys are getting it first here. We'll unveil this a little bit on stage tomorrow. We're chatting with one of our public company CEOs. So it's going to be very topical for the time forward. To answer your second question, Cboe, US. What does that mean for us as a stock exchange? It's huge.
Right.
Neo originally, we were a Canadian-only outfit. We brought the world to us, and we did a great job. We've got tech, psychedelics. You mentioned some of our credits. We refer to them as the innovation economy, things that retail investors are really interested in. What we saw in Cboe and why we agreed to the transaction with them, they're a global stock exchange operator in equities.
Right.
Despite their name that says options in it.
Okay.
They're actually an equities powerhouse. They've got a US exchange that can do what we can do at Neo. They've got a UK, Amsterdam, Australia, and Japan market all ready for stock listings.
How was that all put together?
So they've been acquisitive. The parent company that owns Cboe is called Cboe Global Markets.
Okay.
They're a global stock market operator. They also operate options exchanges, clearing houses. Think of them as infrastructure specialists for everything financial markets.
Right.
For us at Neo, that meant we now had a pathway to bring all of our public companies to the rest of the world.
Yeah.
We can finally go in reverse.
Well, I'm thinking fast forwarding as we like forward-thinking statements. If you see no movement with legislation in the U.S., which I think in a lot of ways it is aiming and going in that direction, what does that then mean if you land one MSO, like the conversations that you're having amongst other MSOs within the space? Because we all want to see, even from a retail perspective, institutions come in and start buying this, right?
Yeah. So our goal right now, ready all of the U.S. cannabis companies for a possible U.S. pathway.
Okay.
That means bring them to the Neo Exchange, get index eligible, get institutionally held now.
Right.
And for the majors in the space, if you're $500 million, $750 million in market cap in this market, you can actually be in an index. That's something that is underappreciated, undervalued, and in today's day and age, who doesn't want more buyers?
100%.
Right? Stock goes up when you have buyers. This is a scenario where you can get it without having to pay for capital. So for a large company of size, this is the time to get ready for eventual pathway to U.S. markets.
I know you can't comment on competition, I won't name any names, but are you surprised at all at other exchanges, and we probably have an idea who we're referring to, but they haven't done this sort of thing before? Because this seems to be, like, on paper, a very lucrative opportunity. Like in the event, like they said, everything continues to stall in Washington.
Yeah. It's a big deal. And being a senior exchange is one thing. Having companies that are senior exchange eligible is another. For us, when we're bringing those companies to our market, we're vetting them all up front to come to NEO. That means our review and the Securities Commission review is being done at the same time. That's important. Not every company on every market is going to be eligible for a senior market. So for us, we're really working to make sure our companies follow those non-venture, in Canadian terms, rules and can adhere to our standards. We want to be their partner.
Okay.
So does it surprise me that it hasn't been done by others? No, this is a first.
Right.
Columbia Care is the first MSO to make it into this stature with an index. Others are going to follow.
Right.
I can pretty much guarantee you they will try. But for us, we got first mover once again, and this is something that we're incredibly proud of. And
so establishing those relationships. You talked about vetting. What are some of those requirements that you're introducing when it comes to the vetting process?
Biggest one's governance.
Okay.
When you look at independence on your board, most all senior public companies have at least three independents on their board.
Okay.
Independence is key for good governance. It means people
for viewers that are still understanding that when you say independence, can you elaborate on that a little bit?
They don't have a significant financial interest in the business, so they're not conflicted. Is the idea. You want people who are not relational to the business, guiding, watching over the company. Second, you need independence on what is called a finance and audit committee.
Okay.
So your CFO, who is running your books and records for a company, can't also be involved in the audit. Seems intuitive.
Okay.
But for senior exchanges, that's not permitted, so you need an independent finance and audit committee. Tighter timelines also come with being on a senior exchange. It's very important. At the end of it, when you look at benchmarks like MSCI and institutional money, they get all their data at the same time. If you're delaying financial reporting by quarters or by months, which happens on venture exchanges, you don't have a chance of being included in an index. So these are all things that have to come together. There's tighter rules and obligations for the benefit. That's really the key.
What's the feedback been like amongst some of the companies that you've been speaking to while you've been here in Chicago? Because I'm sure there's lots of interest, right?
Tons. For us, as the only senior exchange specific to the Benzinga event, where we're open to U.S. cannabis business, it's a great spot to be in right now. We're having a ton of fun of it. Also, too, it's not just about getting listed. Like, that's step one, as you know. Once a company files the paperwork, gets ready, all their marketing stuff is ready to go, that's frankly where the rubber hits the road.
Right.
After you're public, it's babying that stock, managing your investor relations portfolio, being careful with how you raise
Do you see that missing right now?
In many companies, it does. This is one other uniqueness to NEO. We actually have a requirement in our listings manual where our public companies have to spend, and it's not a small amount, at least $100,000 a year on investor relations.
Interesting.
I don't want the CEO running investor relations off the side of their desk.
Right.
The point is dedicated portfolio. So working with folks like you, IR firms, hiring, doing LinkedIn accounts, like promotions, those are all things that public companies have to do. Investors don't find companies.
Right.
You've got to promote, raise awareness responsibly. And that's really what we're after at NEO.
I got to admit, when I hear this could be one of the best kept secrets of the last couple of days at this event, because when we listen to what's going on, there's not a lot of capital out there. There's a lot of consolidation that's going to take place. Smaller companies are bleeding cash. They're starving for obviously any kind of like revenue from a business standpoint. But most importantly, we all know this is a retail play. So this really, in a lot of ways, could change the game. So how do you see this kind of developing over the next, say 6 months, again, if we don't see a lot of like legislation moving in Washington?
So that prep phase is now. And speaking about the Benzinga event for our NEO business in Canada specifically, we are watching companies get ready. And that means bringing yourself up to the highest standard in Canada that you can. while capital markets aren't bringing new companies out to market, the Neo team and I have been aggressively working on bringing qualified, ready companies to our market now, so that when the U.S. Is eligible for them, they have a strong toehold position and track record behind them on Neo in Canada to transport to their U.S. review.
How long has this whole idea or process that you're going to be doing been put into place? How long have you been working behind the scenes on this?
So in capital markets, when they're moving, it's very easy to keep track of what's coming and watch your pipeline and grow your business. And by title, I'm responsible for the listings business at Neo in Canada. So when new business comes, it's great. We're all happy. We're all moving. When new business slows down, where else can you grow, and how do you find new partners to come to you? Easy way is start having conversations about bringing those qualified companies to us through a migration.
When you met with Columbia Care, what was their biggest concern when they first spoke to you, and what was, I guess, your answers or solutions to that?
Early days, like the name brand recognition of Neo 7 years ago was tough. We were at a brand new Canadian stock exchange. There were already 4 or 3 others in market before we got here. Helping them understand, share that data, intelligence, information after they were listed was one of the things that solidified the Columbia Care crew to stick around with Neo. They've been a benchmark for us on so many different things, and their CEO, Nick, is an institutional investor himself, previously at an investment bank. So he gets credibility.
I know you can't comment on this, but I got to ask the question. One can only think Columbia Care, obviously in association with Cresco, but are these the kind of conversations and types of companies that are ongoing right now?
They would be certainly a very valid conversation for us to have. Obviously, Columbia Care is a public company today. They would have to manage that disclosure appropriately. But for us, we want to keep our clients. We're not in the business of losing them over the years. So we're very focused on making sure that good companies, as they're trying to think about getting ready for U.S. markets, find their way into a Neo listing.
Wow. So that announcement was what, June 1st?
June 1st, Cboe closed on the Neo Exchange business. The announcement originally was in November last year.
Wow. Yeah. Interesting
times. It's going to be fun.
I bet, like, for sure. You also, like, I were at one time, and still are, obviously, with the position in the psychedelic space. It's been, tough sledding for the industry for a whole. For those that are still invested in the space, I've had personal conversations with a few companies that are starting to see institutional interest again, because now that we're at the, I don't want to say the peak end of COVID, but we're going through quote unquote a recession. A lot of people are overwhelmed with mental health. People are really starting to see a true business model with some companies and a pathway to revenue. What's the feedback that you've received amongst the psychedelic space, and how do you see that moving over the next year or so?
Well, in a way, psychedelics have gone through the same wave of retail investor interest as U.S. cannabis did.
Hasn't it?
Much faster.
Yeah.
And COVID helped accelerate.
You think it's because they were smarter and they've learned the lesson through cannabis?
Maybe.
Yeah.
But if you look at the charts, it's a different animal altogether. And I think the investors that understood that psychedelics are more like biopharma, not like U.S. cannabis, they figured that out quickly.
Yeah.
But it is still a retail investor setup for now. The difference with psychedelics and biopharma plays and what it's kind of become known now, they are capital intensive. Those companies need to continue to raise money over time to fund the research, fund the analysis, and the goal is probably one of 2 things. Patents that they can then go and monetize, license, sell, or maybe an acquisition at some point, if not of their own, then into another company. They're enabling access to a set of research that frankly nobody was touching. So while the new market pipeline has been slow, they're all watching cost of capital. Why raise when stock markets are depressed and they're not getting a good valuation out of the company? Smart money cashed up early, like in U.S. cannabis, so there's a parallel there. And they've been waiting out until markets return and retail investor sentiment comes back before they decide they need to tap markets again and continue moving. But being on a senior exchange has meant companies maintain their cashed up early, and we're prepared, and that's something that we're very proud of.
It's a bold move, but a smart move, and a needed move, right?
Absolutely. One of our early psychedelics, I think the first one on the continent, if not in the world, with Mind Medicine. They made it into the same index that Columbia Care is in. They're now dual listed on NASDAQ. They're a terrific example of what it means to be listed, prepare on a senior exchange in Canada, and then take that business on the road to the U.S.
Who are some of the bigger players within the psychedelic space? You have MindMed,
Cybin, absolutely would be number 2 for me in the space. There are a few other small and micro-cap securities, Midicine Innovations. I know you know the crew really well. Atai would be an example of a US only issuer that never came to Canada. Same with Compass Pathways, obviously. And those are examples of skipping the Canadian markets and going straight to the US, which as a Canadian, they're missing a big opportunity with our retail investors.
Yeah. I got to look at, like, it's incredible how much information you even find on Reddit anymore. You know, myself, I used to work in traditional television for a long time, but it's just incredible how hyper-focused, you know, a lot of these forums are. And there is, you know, let's face it, the online world can be unpredictable, but there is a lot of great information on there. Do you find that you are connected, or at least trying to get through to those type of audiences through those kinds of networks? Like, how important is that? Because when we look at this new, like, look at us with our content platform and what we're trying to do, this is the way people consume content now, right?
I would say social media of all forms, especially in the pandemic, extremely critical. Anybody who ignored a social media channel, they're now 5 years behind.
Aren't they?
Ultimately. So for us, you know, you look at the combination of platforms, LinkedIn for professionals for the most part. You've got Twitter, you've got your email blasts and workflow. Reddit very quickly becoming a very streamlined, easy way to tack into the retail investor.
I find that with your model, like, well, how long has it been since you guys launched?
We've been up and running now, coming up on 7 years.
Has it been that long?
Yeah, I've been with the company for 9. Started on the product side of our organization, built the exchange. Once we were done building, how do we glue it all together with partners?
It's almost like the exchange for the Reddit investor, right?
We're very retail friendly. There's one other thing that, you know, with a Zoom screen we can show you one of these days, but Neo listed securities are the most visible to retail investors.
How so?
The quality of data that shows up on discount platforms is more complete than any other Canadian market. An example, you look at any venture or TSX listed company, you look at your screen, you're likely seeing 30, 40, maybe 50% of the volume information on your terminal.
Right.
That's every discount broker, that's every website, Yahoo Finance, Apple Stocks, the works. What you don't realize is that there's 50% running around somewhere else in the market that you, as a retail investor, can't see. Pro tip, your advisor also can't see it, which is ridiculous. That's something that Neo and the team and I have been pushing on with our regulators in Canada for a long time. I think there's a pathway finally for something like that to get some headlines finally. But when you look at Neo listed companies, the quality of data that gets published is actually much greater because of one thing. Our companies are traded primarily on our markets. Which means the amount of data that gets to retail investors is more like 85 or 90% of the information.
In comparison to what?
40 or 50 best case with every other Canadian exchange. That's something that's critical for our business and why companies like Columbia Care, like MindMed, realized, appreciated the impact of that once they were listed. These are things we talk about.
What are common questions that you think? Because when you strategize and find out, okay, what do we need to provide for our audience and our investors? What do you think is the most common feedback that you get amongst the investment community when it comes, in particular, because we're in Chicago, the cannabis space?
I would say disclosure is number one. Like being able to easily find in a transparent way all the information that I might want to consume, whether I can understand it or not. TBD. Number two, does the story make sense? There's a lot of complexity in U.S. cannabis in particular. You're a cultivator, a grower, a distributor, you own a brand. You got to be able to distill that message down into something that is fitting to your audience. You guys do a great job at that within the report, and it's something that I think you need to continue doing.
Appreciate it.
It's a hard story. Explaining supply chain gaps and issues and how that drives a store and a storefront and a brand, very disconnected. CEO has got to be sharp at bringing that story forward to retail. Without it, it doesn't work.
It's so important. But we're going to see a major shift, I think, even from a media landscape as well.
It's coming.
The world has changed. So the big takeaway here, and as we sit here like last couple of days here at Benzinga, so there is potentially a pathway, not potentially, but there will be institutional opportunities for these companies through the Neo.
Correct. There is.
Great.
And it's been proven in a press release to our retail investors that you can go and find it. Google Columbia Care, MSCI, and you'll find it there on their website.
You see, there is hope. Good stuff. Leave a comment below. What do you think? Are you happy? And obviously, there could be institutional dollars here in the cannabis space. I would think so. We'd like to get your feedback. What are questions that you want to know pertaining to this industry when it comes to institutions? My main man, Erik Sloane, will have that feedback for you as we start to have more interviews with him and give you feedback on what you need. Again, Appreciate the time, obviously, for checking in here today. Congrats.
Pleasure.
Great job.
Thank you so much. Really appreciate it, Chad.
All right. Thanks, Eric. Hey, everyone. Thanks for watching. And if you like this video, wait until you see what we have next. Some of the best thought leaders in the verticals that we cover, from cannabis and psychedelics to cryptos and NFTs and sports wagering. So if you want to learn more, make sure to click on that bell for all notifications, and don't forget to subscribe to our channel. Thanks for watching.